These stocks are riding the green energy wave, offering tremendous upside ahead. These energy stocks to buy present themselves as needle movers in the fast-evolving renewable energy sector. NextEra Energy. Impressive revenue and earnings before interest, taxes, depreciation, and amortization growth. Clearway Energy. 25-year growth pipeline, excellent earnings before interest, taxes, depreciation, and amortization margins, and an effective debt management strategy. Brookfield Renewable Partners. Consistent top and bottom line growth supplements strong clean energy supply potential. Let's dive in. Here are the 3 top stock picks to profit from the energy boom. Welcome to Timely Investment Research. According to the International Energy Agency, the new industrial age powered by the green energy boom could become an industry worth over $650 billion by 2030. Moreover, related jobs in the sector are expected to grow by more than 50% to 14 million by 2030. Therefore, investing in the best energy stocks in the renewables space makes sense, considering the massive upside these companies offer. Industry experts are incredibly bullish on the sector. Most expect double-digit compound annual growth in solar and wind power installations over the coming decade. Furthermore, the U.S. Inflation Reduction Act enacted by the federal government last year has effectively transformed the market's outlook for the energy sector. This was furthered by the Russian invasion of Ukraine, with plenty of catalysts leading investors to shift their focus toward green energy and away from fossil fuels. With that said, let's look at 3 of the best energy stocks proving to be trailblazers in green energy production. Number 1. NextEra Energy. NextEra Energy is the top electric utility holding business in terms of market capitalization. Additionally, this company is also one of the major providers of U.S. infrastructure in this space. The company operates under 2 primary segments, Florida Power and Light, and NextEra Energy Resources. Florida Power and Light caters to residential customers in Florida, generating roughly 76% of its energy from natural gas, followed by nuclear and solar. This segment reported a healthy $3.7 billion in profits in 2022, compared to $3.2 billion in 2021. NextEra Energy Resources operates a robust renewables business spread across the U.S., generating about 50% of Florida Power and Light sales. Moreover, the segment has proven to be even more profitable, delivering adjusted earnings of $2.441 billion in 2022, or $1.23 per share, compared to $2.206 billion in 2021. Overall, NextEra's business has performed impressively in a strong pricing environment. Moreover, its revenue and earnings before interest, taxes, depreciation, and amortization growth have outpaced its 5-year average growth by double-digit margins. Additionally, with a rock-solid cash balance of $8.2 billion, the company's consistently growing dividend is as secure as ever. Number 2. Clearway Energy. Clearway Energy is a clean energy powerhouse with 5,500 net megawatts in solar and wind generation projects. Impressively, the company also operates 2,500 net megawatts of highly efficient natural gas facilities. Clearway's impressive asset base has been bolstered over time by continued capital investments. The company's focus on projects that provide an effective yield of 9% or more has positioned the company as among the strongest fundamental plays in the sector. Accordingly, it should be no surprise to many that Clearway has done a remarkable job of maintaining its strong profitability profile. The company has an incredible earnings before interest, taxes, depreciation, and amortization margin of 74.4% on a trailing 12-month basis. On top of that, it has generated a free cash flow margin of 64% for the year. The improvements in its bottom line are due to lower finance costs, a testament to its effective debt management. Furthermore, Clearway's debt-to-equity ratio improved to 1.61 last year compared to 2.62 in 2017. With its resilient liquidity position, Clearway's dividend is well protected. Thus, the company's management team is now targeting annual dividend per share growth in the upper end of its guidance, at 5% to 8% through 2026. Number 3. Brookfield Renewable Partners. Brookfield Renewable Partners is a top-tier renewable energy play with a consistent track record of generating strong top and bottom line growth. Despite recent market-related headwinds, Brookfield has posted some impressive results. The company wrapped up its fourth quarter, posting more than 9.6% revenue growth to $1.19 billion. This revenue surge coincided with a 6% increase in Brookfield's funds from operations on a year-over-year basis. For the year, Brookfield Renewable Partners' funds from operations rose to 8% to $1 billion, which resulted in the partnership raising its quarterly distributions to 33 cents. Thus, Brookfield Renewable Partners stock now provides investors with a total annualized distribution of $1.35 per unit. Brookfield has an enviable green energy capacity of 11,000 gigawatts per year. This has been bolstered by recent orders of 3,500 megawatts of new projects, taking the company's total capacity potential to 190 gigawatts. Hence, the company has positioned itself incredibly well to benefit from increased demand for clean energy sources. Currently, Brookfield Renewable Partners stock trades at 8 times trailing 12-month cash flow estimates, roughly 44.6% lower than its 5-year average. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.